His statements are crucial as they can influence monetary policy expectations, affecting the US dollar bonds and overall market decisions. Additionally, physical gold demand in the US has surged as investors try to get ahead of potential tariffs. But considering this movement, we can see maybe that the price can try to reach a new downward movement. Within traders, I'm Isaac Martinez, a market analyst and trader at XChief. In today's session, we will conduct an in-depth technical and fundamental analysis of key financial instruments, including the US dollar index, the SP 500, Euro USD, and Bitcoin. With heightened geopolitical uncertainty, significant economic data releases, and increasing market volatility, understanding these dynamics is essential for strategic decision making. Stay with us as we examine the latest trends and key levels that may shape the financial markets in the days ahead. As you already know, we always start with the economic calendar. This week brings key financial market events, starting on Tuesday, February 11th at 9 a.m. with Federal Reserve Chair Jerome Powell's testimony. His statements are crucial as they can influence monetary policy expectations, affecting the US dollar bonds and overall market decisions. On Wednesday, February 12th at 7:30 a.m., inflation data will be released, including the Consumer Price Index and Core CPI, which exclude food and energy. These indicators are vital because they reflect inflation levels in the economy. A higher than expected reading could lead to expectations of higher interest rates, strengthening the dollar and impacting risk assets. The year-over-year CPI will also be published, providing a broader perspective on price changes over the past year. Later at 9 a.m., Powell will testify again, potentially adding further market volatility. On Thursday, February 13 at 7:30 a.m., the Producer Price Index and Core PPI will be released. Unlike CPI, which measures inflation from the consumer's perspective, PPI tracks price changes from the producer's side. If production costs rise, they may be passed on to consumers, fueling inflation. Additionally, the unemployment claims report will be published, showing how many people feel for jobless benefits for the first time. A rise in claims may indicate labor market's weakness, while a decline suggests employment strength. On Friday, February 14th at 7:30 a.m., we will see retail sales and core retail sales, which exclude auto sales. This report is essential as it measures consumer spending, a major component of the US economy. Growth in retail sales suggests a strong economy, while a decline could raise concerns about an economic slowdown. In summary, this week is packed with inflation data, Powell's testimony, and employment and consumer spending reports. Each of these events has the potential to create market volatility, especially in the US dollar bonds, equities, and cryptocurrencies. And now let's continue to the most important fundamentals of the week. Gold had another volatile week driven by tariff threats and rising inflation fears. It started the week at $2,797 per ounce and closed on Friday around $2,860, maintaining a tight range. The market saw strong moves, with an initial dip followed by steady gains through the Asian and North American sessions. A spike on Tuesday pushed gold to a fresh weekly high, and by Wednesday it reached a new nominal record of $2,880. Thursday saw a brief test of support, but Friday's non-farm payroll report triggered another surge, taking gold to a new all-time high of $2,886 before retracing slightly. Market experts remain highly bullish on gold. According to the Kitco News weekly gold survey, James Stanley from Forex.com believes that there are no signs of the rally ending. Some analysts project that gold could reach $3,000 in the first quarter of 2025 if instability persists. Traders are also closely watching the Federal Reserve. While there is speculation about a potential rate hike to combat inflation, most believe the Fed cannot continuously adjust rates without consequences, which could keep gold strong in the short term. Additionally, physical gold demand in the US has surged as investors try to get ahead of potential potential tariffs. This has created disconnect between the New York and spot markets, increasing volatility. Overall, gold remains in a strong bullish trend, supported by economic uncertainty, monetary policy, and increasing demand for safe haven assets. While pullbacks may occur, analysts consider any dip as a potential buying opportunity. In other news, Bitcoin experienced volatility on Friday after President Donald Trump's warning of new reciprocal tariffs on various countries triggered a wave of risk aversion across financial markets. By the end of the New York session on Friday, Bitcoin was trading around $95,853, marking a slight decline of 1% and positioning itself for a weekly loss after dropping 4% the previous week. Trump's tariff announcement created fresh uncertainty about global trade relations, adding pressure to speculative assets like cryptocurrencies. The U.S. non-farm payroll report also contributed to market movements as data from the Bureau of Labor Statistics showed that the economy added 143,000 jobs in January, lower than expectations, and a sharp decline from December's revised figure of 307,000. The unemployment rate edged down to 4%, while average hourly earnings rose 0.5%, exceeding forecasts. Despite concerns about potential distortions from wildfires and cold weather, the Bureau confirmed that these events had no measurable impact on the data. The labor market appears to be cooling but not weakening significantly, reinforcing expectations that the Federal Reserve will keep interest rates unchanged until at least June. Bitcoin, which is often regarded as a speculative asset, mirrored the broader market sentiment, declining alongside equities after Trump's tariffs announcement increased concerns about trade tensions. Crypto markets have also been struggling with a lack of strong catalysts for further price gains. The macroeconomic uncertainties and expectations regarding the Federal Reserve's policy keeping traders on edge. However, despite short-term losses, Bitcoin remains significantly higher over the past year, supported by increasing mainstream adoption and optimism over a more lenient regulatory environment under Trump's administration. Meanwhile, institutional interest in cryptocurrencies continues to grow, with Franklin Templeton filing for a crypto index ETF with the SEC, aiming to provide exposure to Bitcoin and Ether. Now let's continue with the technical analysis of the markets, and we will start as always with the US dollar index. The first thing we need to know is that we have reached several targets that we have established the past week, specifically two of the main bearish targets we had last week. With this, we can consider that now the price of the US dollar index, the cotization, now has enough liquidity to continue an upward movement. And you can also take into consideration that with this last low, we can define it as a higher low, so it is highly possible for the price to continue rising and maybe trying to get bullish targets for the next week, for this week that we are assessing this asset. So in conclusion, for me, the most important objectives of the US dollar index should be to try to find bullish targets. These targets are located here. The first one at 108.734, the next one located here 109.637, and the next one will be located here at 110.054. I will erase these last two targets that we have already established, and we can establish now also objectives targets for the bearish traders. For this, you can consider this point of the US dollar index at 107.516, next one 107.296, and the last one located at 106.969. With the SP 500, we reached several targets the past week. One of these targets were located here. We were talking about the pullback, that the price can go down to $5,962. The price not only went there, but also touched this fair value gap that is located here at $5,940. After we see that the price fill partially this fair value gap, the price starts a new upward movement. After this, we can start projecting that the SP 500 can continue this upward movement, but we need to stay with some caution here. And why is that? That's because of all the geopolitical tensions we have right now that we have mentioned in the fundamentals in the first part of this analysis. However, considering this information and considering this structure, yes, we can establish for the next hours that the price can continue this downward movement. Let me erase these points of the price, also this one that we have established the past week. And we can say that this week the price could try to reach $6,012 with the SP 500. So after this, it can get more liquidity, and with this, the price will have enough gas to try to make a new upward movement, to try to reach a new high. However, if this liquidity is not enough, the most important move that the SP 500 can make in the next hours will be a downward movement. And why is that? Because in the 4 hours interval, and it is better to see it in 1 hour interval, but for us it's important to give you this analysis because this will be useful for the next days. So with the 4 hours interval, you can see that from here the price is making a downward structure. And yes, we are bullish with the daily time frames, or even in the weekly time frames, but considering this movement, we can see maybe that the price can try to reach a new downward movement, or at least try to reach the 0.5 located at $6,012. So with this, it has enough liquidity to try to keep pushing up. Targets for the bullish traders should be located at 6,121. The next one located here at 6,128. As you can see, they are really close to each other. And if you want to be more cautious with this, you can also take into consideration 6,101. As we have already done this with the Fibonacci retracement, you can also consider the next objective, which can be located here at $6,198. Now we can continue with the Euro USD. It is not the best structure. We have already talked about this in previous analysis. You should be cautious with the Euro USD, considering that the price could continue in a downward movement. So the next objectives that I could consider for this asset should be at 1.02308, and the last one will be this last low at 1.01775. On the other hand, if you are trying to make bullish trades for this week, maybe you can consider these points located at 1.03911, 1.04199, the next one here 1.04572, and the last one will be here at 1.05333. For me, very difficult that the Euro USD can recover considering all the fundamentals we were talking about. The most probable movement will be trying to get these objectives located in these bearish targets. And now let's finish with Bitcoin, an asset that had a really difficult week. It is important for Bitcoin to try to not lose $91,178 point, because after this it is highly possible for Bitcoin to continue a downward movement. Objectives or targets for the bearish traders should be located, the first one here at $94,700 and the next one located at $91,178 that we have already mentioned. If the price continues to fall, it is possible to try to reach also $86,672 located here. So we should pay attention to these movements this week for Bitcoin. If you are bullish with Bitcoin, okay, you can have several targets, and by that I mean targets here, even targets here. The problem is that now Bitcoins need more power to try to establish a market structure shift, and that means try to break at least the point of $105,000 to make a new upward movement that we can trade with more trust. So if Bitcoin doesn't do this, it is difficult to make a trade without risking too much. That concludes today's market analysis. If you found this insight valuable, I encourage you to like this video, subscribe to the channel, and enable notifications to stay informed on the latest market developments. Additionally, if you're looking for a trusted and professional trading platform, visit XChief.com and take advantage of expert resources strategies and trading tools. Thank you for watching, and I look forward to seeing you in the next session.